And of course, in every one of those markets, we see peaks and troughs. We see, massive bull runs, and we see massive crashes. Now, a sophisticated investor or a smart investor will hedge against those risks. They diversify. They don't put all their eggs in one basket. They do understand how they can mitigate against potential crashes. So when we see comments like, it's going to crash, it's going to be the worst crash ever, you may or may not be right, but that doesn't mean that you have to make losses.
The person who bought the very top of the market in 2021, right, and then witnessed what these people say, the crash is going to come. If they understood the long term, they are now sitting in profit.
Has Bitcoin hit the peak? Is it too late to invest in crypto? These are the questions we're going to be answering and more during the course of this episode. Now, 2 weeks ago, we got together, Sam, and we talked about where Bitcoin hit the all-time high. Is it imminent? And within a week, lo and behold, Bitcoin not only hit its all-time high, but it's continued to hit all-time highs since that initial burst of activity. Now, understandably, as a result, many people are asking, is this now the peak? Is it too late? Have I missed the opportunity? Where are things going? In today's episode, we're going to try and demystify some of the market dynamics and assess where we are, giving a holistic understanding of the market and how it's developing. Now, of course, we rarely actually include a disclaimer in the front end of the episode, but everything we're sharing here is not financial advice. It is our own perspectives. And of course, Bitcoin, crypto markets come with volatility. And as such, our message is really to do your own due diligence, take sovereignty of your own financial decisions, and to ultimately do your own research. So I'll put that there. But this has been a really big topic for us, Sam, and our communities. Last night, we had the second of our navigating the bull run workshop series, a two-part series, where in part one, we covered the psychological and emotional roller coaster that comes with navigating a volatile market like crypto, to ground ourselves in the energy of the market, because as prices rise, so does the FOMO, so does the euphoria, so does the potential energy in the market. So we wanted to get ourselves grounded. And then last night we looked at the practicalities and the tools so that you can learn how to navigate what's going on, but also to take profits where necessary and also to mitigate the risk. So a really strong couple of sessions, which actually, just a quick promo, we're doing a special offer on our Navigating the Digital Assets course, which is a 3-part module series to give you the good, the bad, and the ugly of the digital assets ecosystem, really to teach you the fundamentals, get your head around all of the jargon, everything from exchanges, wallets, how to understand and appraise assets. And we've included 3 amazing bonuses now. So we've included both of those workshops that we've done to navigate the bull run, very specific to what's happening right now. And we've also included a bonus, which is a deeper dive in how to appraise altcoins and different projects. So a great time to buy. Not only that, we've also reduced the price very temporarily to $29.95, a no-brainer. So if you want to find out more how to get that, go to weareelevate.org/digital assets. It's going to give you a very holistic understanding. That advert over. Sam, what a topic, what a time to be discussing this.
Absolutely, Dan. Well, we smashed through all-time highs. So we're in what's called price discovery, which is when assets never been in this territory before. So it's finding its feet, finding where it's going to go.
Uncharted territory, Sam.
Uncharted territory, there you go. There's the buzzword.
Yes.
We're literally there. We're living it. And it's an absolutely key time to get educated and understand. I mean, it always has been, but particularly for people, because what happens, Dan, I talked about this last week, and I've talked about it, ad infinitum before, there'll be a lot more interest in Bitcoin once it hits its all-time high. There's a lot of people who haven't believed it ever would. Now, the people who are involved in this space and understand always knew it would. Now, a lot of people have eventually think, will it ever? Now it has. Now their interest coming back. And what's challenging about that for a lot of people, and I completely understand, which is why we want to have these first discussions, is they get lost. And they're already lost, and then they get involved in kind of non-holistic discussions, or they might, I've seen some of the threads on Facebook, Dan, or different channels where, there are people with very strong opinions coming in, and they're not wholly right or wrong, a lot of them, but they're not giving a holistic view, and there's so many angles being missed. And if you're, really new to this market or really unsure, it can be really bewildering. I mean, and make you even more confused. And, people I see, lots of terms get thrown around, and we want to demystify them today, Dan, by looking at some of the charts of it's going to crash, or everything apart from Bitcoin is a shit coin. You're going to lose all your money. You're going to make all your money. It's going to a minute. So imagine that person. I always like to put myself in the shoes of those people, Dan, and that's when I give talks of financial reset. Put myself in the shoes of people who are coming with no extra awareness, and how can we bridge that gap and increase awareness and get better grounded info rather than just throw around strong opinions from people who, know a lot of stuff or have a really strong view. It's not helpful for somebody who's new, who's drowning in info and opinions, but looking to just find out where they are. So as you said, Dan, so they can make a sovereign decision themselves, not be said, well, I got in because he said you must, or I didn't get in because they said you mustn't. There is, and I really want to reassure people, there is a middle world where you can get educated, understand, and make what I call the untangible tangible. Particularly talk about crypto because a lot of people feel it's all untangible, whatever. Bring it into a tangible level, and then you can look at it. I just want to give an example, Dan, that, there is some truth in the, and I have a lot of respect for there's a Bitcoin purist angle, which has merit and valid. But then those people can go too far and say everything that isn't Bitcoin is total shitcoin, don't put your it. Whereas, the smartest people in the world are buying a lot of altcoin assets because these are the future digital asset giants of the world. So when I talk about that, that's not just, clueless people gambling on meme coins. That's going on as well. We have the full spectrum. We have genius, and somebody puts it very well that crypto is equally genius and retarded.
Yes.
And often the people who miss out are the people in the middle who don't look at either those angles. So that almost like there are people buying retarded dog coins who are going to make millions. There are people buying really solid, strong digital assets that will last and sink to, the test of time and grow, make millions. A lot of the middle road people who don't get educated either side miss out completely.
Yes.
So understand those spectrums and understand that, some of the biggest asset managers in the world and the funds, I shared it down in one of those in when we talked about the appraising assets. They are holding many altcoin assets. They're not gambling on meme coins. They are buying the future tech giants because they understand the utility these assets have. So I know it's giving a long answer. We'll dive deep and stuff, but I'm really passionate, Dan, and I get frustrated when I see such binaries get thrown around, and it increases the fear. It does increase the risk for people because they're getting in without good info. And once you've got good info, the market looks completely different. You wouldn't sit around and have people who are in the market educated. As we said, the discussions are not like that, are they? Because there's so much more nuance, and there is a way to be in this market in an empowered state where it's not like, oh God, I don't know what I've done. I hope it goes up. I hope it doesn't go down. There are reasons why everything's happening, and there are patterns, and there are trends, and it's so different when you get educated. So that's my bottom line again. Get educated before you take a decision, and before you have a strong opinion either.
Yeah, what a surprise. Our takeaway already is get educated. But I think that it's so important because, and I may have told this story before because it's relevant, and there was a story of an American pastor who would give the same sermon in his church every single Sunday. And one of the attendees said to Pastor, why is it you give the same sermon every week? Don't you have any other material? And the pastor responds simply by saying, I'll give the same speech until people actually pay attention and do something about it. And it's true, because the evidence that we get in terms of the responses to the content we put out are further validation that education hasn't seeped through yet. So it's sometimes informed opinions, and other times it's uninformed beliefs, and there's a whole hodgepodge in between. And it's not to position ourselves as know-it-all experts. That's not what we're coming up here. We're explorers. That's why we call this the Uncharted territory. We're navigating. That's why we call the program the Navigating Digital Assets, or the Navigating the Financial Reset, because we're exploring. We're open-minded and trying to understand the territory that we're in order that we can make empowered decisions. But also I want to draw some parallels, Sam, because the same is true with other markets. And we're really talking about a marketplace here, a digital marketplace in this instance. But a lot of the parallels are true with the stock market or foreign exchange. It's understanding where you are in the market, understanding that cycles always happen and they always repeat. That's why we talk about bull and bear markets. It's where the bull market is where prices are rising generally, and bear markets are where prices are declining. The same is true in currency markets, in stocks and shares markets. And it's important to recognize that those cycles occur. And of course, in every one of those markets, we see peaks and troughs. We see, massive bull runs, and we see massive crashes. Now, a sophisticated investor or a smart investor will hedge against those risks. They diversify. They don't put all their eggs in one basket. They do understand how they can mitigate against potential crashes. So when we see comments like, it's going to crash, it's going to be the worst crash ever, you may or may not be right, but that doesn't mean that you have to make losses.
So that, it's easy to say that. the person who bought the very top of the market in 2021, right, and then witnessed what these people say, the crash is going to come. If they understood the long term, they are now sitting in profit.
Yes.
So this idea, and that's where I get away from this just binary idea of it goes up or it crashes. There are cycles. It grows, it gets overbought, and then it has to. And that's why I want to use different words about bear markets or corrections or things, retracing. That's different because there's these words that just almost got so much energy to them. Crash. I'm going to go. It's all going to crash. I'm going to literally that energy. Think how noisy it is. It's all rather than, as I've explained, why things happen and the cyclical nature of them and what it's based on. And it changes your whole relationship to those ideas, Dan. And that's why getting out of this kind of visceral emotional reaction to just either or, it's good or it's bad. It's rather than riding the waves, understand the waves, navigating. It changes your journey completely then. And I want people to, be freed of that kind of fear and that kind of misunderstanding.
Well, that's why last week we started with that in the bull run, because everyone wants to know the tools and the practicalities to take advantage of what's happening. But we have to ground ourselves first. And I needed it. I needed it because I'm taking a different strategy this time. Up until this point, I mean, I've been investing in Bitcoin and other assets since 2021. I wish I'd started earlier, but who knows how I would have behaved during previous bull runs. I may have made all of the mistakes, but making mistakes is part of the learning cycle, by the way. I've made a few this week myself. It's small ones, thankfully, just administrative. No losses made. But now I'm adopting different strategies, and as a result, I'm looking at the market very differently. I am diversifying into other altcoins, having previously really taken a long-term view on what I describe as the big 3 or 4. And it creates a different psychological perspective. But even during a bull run, no matter what your investment strategy, it's an emotional, psychological roller coaster, and we have to be able to manage those emotions because exactly as you said, if we're responding emotionally, we're not allowing the rational part of our mind to actually assess things as they are. And as I always say, we end up seeing things worse than they are or better than they are. And what we really need to see things is as they are, and then start to make a plan to meet our own goals, because this isn't about arbitrarily approaching some get rich quick. It's about understanding why you investing in the first place, which is important to recognize, because the same is true, some of those other market parallels you talked about, people miss out. Well, it's the same with the other market. If you hold all of your money in cash in a inflationary asset, it means you're only ever going to lose. Your chart is only ever getting worse. Of course, if you're adding, increasing your income, or you're in business, increasing your profits, your assets are growing. But the reality is, pound for pound, it's an inflationary asset. So
I'm so glad you said that, because it's about also, why the whys can be more than just I want to be in this market. It can be, well, why do I need to maybe diversify out of other markets I'm in? And when we talk about other markets, your fiat holdings are in a market.
Yes.
And a down market.
Yes.
Really down market. And we talked about, how pleased with the people, in all those countries that are hitting, serious levels of inflation, where Bitcoin already hit its all-time high in about 14 countries in their currency way before it happened in the dollar or the pound, because their currency is losing massive value. And so shifting some of their holdings away into a more solid asset that, has scarcity. We talk about gold, which has that quality. Bitcoin is a digital gold. Essentially, that's what it's become. Then, you're not just saying I'm playing the crypto market. I'm actually diversifying, protecting some asset wealth, having it self-custody. So there are all these other aspects to understand, which is why, again, bringing more of these things, having an open, wider conversation about it, is what changes people's perspectives and allows them, as you always said, to make their own, informed decisions. Not to say you've done it because anybody else you do it, but that info and that holistic info, I just don't see shared an awful lot on kind of discussion threads. I don't blame that, because it's very short form, and that's the nature of the internet. It's very just opinion, short form, very hard to get into long discussion, which is why we try and encourage, and I always encourage, better discussions, longer discussions, and a place, a place where all questions and angles come in. So there is no saying, yes, you just do it because it's going to do this. We look at every perspective, and once you've got all those perspectives, you then can sit with that and go, okay, I know where to go from here based on all those possibilities. Don't rule out anything. And you can build a strong investment thesis from that point. But it takes all those ingredients to do it then. And if lots of those are missing, then you don't feel you've got it. And of course you feel uneasy. So I'm just underlying again, education.
Absolutely. I mean, we've done a couple of money management and money mindset sessions within the Navigating the Financial Reset program, which, it's not exclusively about digital assets. We look at the whole macro picture, and the top 10 books, top 10 best-selling books on finance, money, and investing of all time, all of them talk about diversification, because that's what smart money does. There may be times where you allocate a higher proportion to a high growth asset in order to maximize the potential upside, but you still mitigate that against potential risks by having more stable investments. That's the smart money strategy. And again, this stuff isn't taught in school, Sam. Like, there's no financial education. It's not taught in universities. I went to business school. They didn't teach any of this stuff. They didn't talk about anything of this nature. They didn't even talk about business. They talked about corporations. How to be a corporate leader, basically. Anyway, I got my soapbox on that one. The point is this: it's if you're only staying in one chart, you're missing out in other opportunities. But it is, as you said, important to understand the macros. And the people I lean on most in this market to learn more about crypto and Bitcoin and how it's evolving and expand my range of perspectives are the ones that have a big picture view. Yep. It's obviously helpful to get someone who have a very narrow focus. They can help you with some of the tools and the tactics, because they're really zoning in on those elements, that are practical in application, but they don't come at the expense of having the big picture, because, people are talking about what's happening with interest rates right now, geopolitical uncertainty. Are we on the verge of World War III? Are interest rates going to fall? Is inflation going to rise again? Is there going to be another banking crash? There's a heck of a lot of uncertainty in the wider economy right now. Locally, I'm seeing some of the early recession indicators that I witnessed in my banking career when I worked for HSBC, prior to the 07-08 recession, where, you start to see retail establishments closing down, people spending less money in hospitality. I'm seeing some of those early trickle effects here, and there's wider macro effects. Almost every announcement from the Fed now, there's kind of anticipation that, there's going to be bad news, which at some point is going to trickle through. You're seeing sell-offs in the big stock markets. We've seen some extreme greed and some real growth in those. Is that going to trigger a bear cycle? These are all hypothetical questions, but we have to look at it, because if there's a market crash, a generalized economic crash, or there's a general stock market crash, again, people almost don't consider that a crash is simply the movement of money from one asset to another. Yeah, exactly. It doesn't just disappear into the ether.
No, and again, that's that emotional power of these words when they get shared in kind of forums or discussions with no context. So I always say that same thing. It talks down that money moves, liquidity moves.
Absolutely.
So there is this feeling of it's all going to be disappeared, and that's a real. And again, it does leave that scarcity mindset of I'm just waiting for anything to happen, disappear. So and zooming out, getting macro view is so important. So I always say this: do I look worried that the crypto market might crash? Absolutely not, because you're understanding the trend. In a sense, you're looking at the bigger trend, and you can't control short-term movements, and you don't know how that's going to play out. But if you've got a bigger perspective on the trends and why you're in the market, then you can have peace of mind and you can plan accordingly. So it's important to have that zoomed out view and greater awareness of why markets move and what's happening and for what reason, rather than just having this intangible thing of it's going up and down. I've no idea why. I hope it goes up. I'm terrified it'll go down. That's an awful place to be, and I don't recommend it to anybody. So if that's where you are, then definitely get your education and get out of that mindset, because that's not healthy for you. It's always said people don't care why it's going up when it's going up. They're not interested in getting educated because they don't need to. They just feel like I'm just watching it go up and watch the numbers go up on the screen. Very happy. But they feel then really the absolute opposite, which is in panic when it's going down. They understand if you can get educated, then you can be more relaxed in both scenarios. So again, Dan, yours is a great tweet saying, don't get overexcited by the pumps or over fearful by the dumps.
Yes.
Yep. Get yourself a middle ground.
And either way, it's important. Two things is long-term view and understanding the trajectory of the asset class that you're in. And secondly, risk mitigation. There are many parallels. This is really what this represents. And, the Bitcoin maximalist, it's a store of value. And, when we talk about the macro picture, gold has just hit its all-time high in the last week. Most people aren't aware of that. So again, just to very touch briefly on, potential outflows from if there's a stock market crash or an economic crash, people are going to looking to move their assets elsewhere. Gold is at an all-time high, and that's typically a safe haven. Is that no overprice for someone looking to reallocate their assets? Potentially. Is that going to rally further in the face of greater uncertainty? Again, very plausible. But there is a new asset class now in terms of Bitcoin and the crypto markets, which I think will become particularly now there's things like Bitcoin ETFs and potential Ethereum ETFs, other assets. But again, on the flip side of that, it's understanding that institutional money is driving this bull run. It's not retail investors. Retail investors, all the indicators that the retail investors are entering the market aren't really there yet. They're starting to simmer a tiny bit. I'll talk more about that in a moment and potentially show some charts to reflect that. But it's a very different marketplace. But either way, we've got to look at it holistically and understand that if there is wider economic uncertainty, that money will flow somewhere. And at the moment, we saw this week institutions have just, the Bitcoin ETFs have had their record highest inflow of cash, 1.12 billion on Tuesday. After incredible, like it's just a record for daily inflows. It's crazy amounts of money flowing into these funds, and we can see that in the market cap of the Bitcoin market. So, but understandably, then when there is so much money piling in, it's understandable that people are saying, well, is this market now overheating? Is it the peak? Which is why we're recording this episode. And I think I'll hold the big thought because I've got my own hypothesis on what's going on in the market. But and Sam and I are always looking at different theses here. And my question for the market, and I think we'll do a whole episode on this, Sam, is institutional money the new dumb money? Because it's institutions driving this bull run, not retail. Retail, when it enters the market, traditionally will aid the pump, and it will also spill into the altcoins, which drives the altcoin season. It reaches kind of hysteria, and then there's the classic pattern, which we enter the bear market, which you talked about again, as we touched upon. You don't automatically lose if you've got a long-term view, as you said, Sam, and we'll see it on the chart in a minute. Yesterday's peak is today's low point. So there is that. But we'll do a whole episode on that because, again, the future is unknown with the Bitcoin spot ETFs. But let's have a quick look at the chart, Sam, because what I want to show is the Rainbow Index, which is, no one expected this to be an indicator of the long-term trajectory of Bitcoin, but it's really interesting to track this through, which shows the performance of Bitcoin over time and the kind of support and resistance bands that are illustrated by these rainbow colors. So again, Bitcoin halving, we've talked about that in previous episode. We won't get into the technicals of that, but every 4 years, Bitcoin goes through this halving process. And what typically happens is you get this rapid rise in price afterwards, followed by a bear cycle. So you can see here if you can see the shape of this curve, it's an upward trajectory, meaning that, if you'd sold at the peak there, you're still in profit today. If you failed to sell at the peak there, and you entered into this. Oh man, my screen is just gone. I've got myself in a right pickle. What I'm saying is that yesterday's peaks are today's lows. If you look at this, it's these parallels. You look at this peak here, it's virtually the low of the next market. So we see that the ever increasing trend due to the scarcity mechanics, unit economics that come with Bitcoin. But again, you can very clearly see these upward cycles followed by bear markets. And what's typically happened post-halving is we've seen this rise into this kind of red.
Have you got it back up, Dan? It's not on.
Oh, yeah, sorry. Let me pull that back. Thanks for flagging that. I thought it was merrily showing the chart. Oh, we got that back there.
There we go. We're back in.
Yeah, so post-halving, you see this typical rise, which goes up into the red or upper parts of the rainbow, followed by a bear cycle. That happens over this 4-year period. But you can see there's a good 2 years of growth, typically 18 months of growth, followed by a comparable period of bear market. And we've seen this in every cycle. So, again, the previous halving, which came during the kind of last bull market, which kind of peaked in late 2017, and then the next bear market. And then we see, the 2020-21 double peak, followed by another bear market. And now you can see the prices are now rising. So when we ask, is it the peak? Of course, the past isn't guaranteed to predict the future. And I would say, Sam, that this bull market is very different to previous bull markets. As I've already alluded to, it's driven by institutions, it's driven by regulatory factors. There are other variables driving the market, but some of the patterns are still playing out. And what's interesting, as I observed in the last workshop, is that people are saying, well, why is it hit the all-time high before the halving? That normally happens after the halving. I've got a very simple explanation for that, which I can't really understand the science of it, but I can tell you what the charts show is that every halving, we've seen that the entry point for the bull run has gradually increased by one band almost every halving. So here you can see it entered it in the blue, and the next market, it started in the next band up. In this market, it started at the next band up. And in theory, we're going to, maybe this does indicate a potential slight correction, but we're basically moving up a band every halving as the entry point. And of course, whether that's an all-time high or not depends on the previous peak. It is roughly correlating with the previous peak in this instance. And it hasn't, the peaks we've seen here follow this bear cycle. And, now, how much further will this progress? Will it hit 100,000? Depending on where this lands on the band, it doesn't always hit the top. The last two peaks, the double peak, you could argue if there hadn't been a double peak, it may have hit the red before coming down, and maybe that's a kind of spread. Historically, it's gone into that red zone, but there's an indication that there's margin there, Sam. But this is just one chart, and there are many others. And as I said, this isn't a prediction or a guarantee that things will continue to rise. Things are different. It's important to caveat that. But I'm interested in hearing your perspectives on what we're looking at here. So,
well, first off, Dan, the number one thing is for a lot of people, and I'm talking about, again, these people who've got no great awareness, but suddenly think, should I, shouldn't I, what am I doing? They're coming completely blind and have never seen a chart before. So it's almost just like, say it's want to buy Bitcoin. I've got Bitcoin, it's this price today. They've got no idea of its history. And what I love, Dan, is to show the growth over time, show the growth curve, show that within all these bull markets and bear market cycles, which are very natural, there is a growth over time. So we're at a logarithmic growth curve here. So understanding that can transform it rather than it, some people think it's over, it's going to disappear, what's it doing? This is the growth over time, and that's really important to see. The other aspect, like you touched on there, Dan, is, a great adage is when you're in this market that, trying to time it perfectly, very difficult for everybody. But time in the market can serve you much better than timing the market. Now, if you can do both, and when you get more educated, you can time the market much better, that's certainly sure. But let's look at those examples of people, classically retail investors who, have bought into the FOMO, Dan, have bought in like 2017 at the highs when it was, reaching the media, everyone's getting rich on Bitcoin. And I know people who did this, who have bought the top of the market, whether it's Bitcoin, small coins in 2017. They didn't know, and they didn't know where they were in a cycle. They didn't understand the market was overheated, where it come from, huge growth. Perhaps it was due a bear market correction, what's happening in the macro, and then watch their portfolio bleed maybe 90% over the next year and a half. Now, if they'd not got educated and said, hang on, I need to understand what's going on here, they could have panicked and sold, and then said, I lost all my money in crypto. These are stories, I lost my money in crypto. Those same people, and I know people did this, Dan, right, who had the patience and the ability, and that's why allocating money that you don't need in the short term, that you've got to maybe a minimum of a 2, 3, 4 year view, gives you that peace of mind. Because those same people who would say, well, I'm 90% underwater potentially, and again, them taking a loss, it just means their portfolio is 90% down at that time. By 2021, 2 years later, a lot of those people were 10 to 20x up on their original investment, Dan. I'm not saying that they were recouped back to what I said. They were recouped that 95%, downturn, and then went on to make 10 to 20 times their portfolio. Some of those people in altcoins as well. So understand the perspective can transform this idea of, oh God, have I bought the top of it? When you're saying you're in a growth area and you're buying solid assets, I always said, nobody who's bought solid assets in the digital asset space, who's had time and patience, has ever lost any money, and if they thought correctly, unless there's a mistake or they left them in third-party hands. But the adage of doing it strongly, but the perception can be by anybody, well, all these stories get out, but they bought crypto, lost all the money. Now, often it could be they bought very high, didn't understand what's going on. Maybe a lot of people, people listening to this call, bought Bitcoin in the 60,000s the last cycle. And maybe, and again, with no judgment, maybe during the bear market when it went down to 1,000, they were scared by the stories and they sold it and took a large loss. if they'd had that conviction, and again, if they'd had the ability to invest only what they need, not the short term, it'll hold, they are now back in profit today and seeing that growth. So again, understanding those perspectives and where we are for people is really important, because so many people new to the market or just asking questions on Facebook or on Threads or on YouTube, they may have never seen a chart before that, and never know where it's come from, where it's going, and also the reasons why the market moves, which is based on macro things. And as I always talk about, the 4-year business cycle, the money printing cycle, that's what's moving asset classes, not just it's doing its thing on its own. And
Absolutely. But overlaid with that, there is the psychology of a market, which is shown here, which I think perfectly illustrates this is a Wall Street cheat sheet, psychology of a market cycle. Your point is, and it's true, having looked at the rainbow chart just now, anyone that's had a long-term holding of Bitcoin has never lost money in Bitcoin. You only lose if you follow the psychology of the market and do exactly what happens here. You get that euphoria, during this point here where there's thrill, people are buying at the top, but then the anxiety kicks in, people believe that it will rally back, and then the panic comes in, people sell, and they get out of the markets. Everyone that I know that has lost money in Bitcoin has been because they exited here. And that's how you lose. You buy at the top and sell at the bottom. That's not what smart money does. So it's important to understand cycles. It's important to understand charts. It's important to understand psychology. It's also important to understand macro trends, the macroeconomic environment. So there's a lot to get your head around.
But Dan, I also want to bring that point, and you made it earlier, but to reiterate it, you're still seeing that growth over time. So even if, for example, let's say that's a fractal there that plays out. Let's overlay the last bull run onto that fractal, okay? And so the bear market low around COVID crash was about $3,000, okay? So you bought Bitcoin down there. Even if you ran the chart all the way up and it went up 69,000, and then you lived the crash and did nothing all the way down to the next bear market low, the next bear market low was 15,000. So it's still 5 times up, even after the crash and all the headlines and the Bitcoin's over, crypto's over. From the last bear market low to the next bear market low was 5 times up. That still outperforms every asset class in the world. So that perspective is really important, because again, that following that crash, which is actually just a bear market following a bull market, things become overbought, overhyped, things need to correct. After the correcting all the way back down to its lowest point, where people would describe this as crypto Armageddon, everyone's lost all their money. Let's want to hear those stories. Everyone's lost all their money in crypto. Well, that person, even if they didn't take any profits, they could have been taking huge profits and been 20 times up at 60,000. But even if they didn't, and they were holding over time, as you said, they are still at the bottom of the market, five times up, 600% up from where they were in the COVID lows of March 2020. So fast forward again, and yet today, if they'd held now that original, we were up to those highs again. So those perspectives are really important, Dan. I'm really hoping that these, for people who are new to this market, who've got no clue, these, seeing the charts and understanding the journey is going to really help them get a different perspective on something that might have felt really intangible before. Yeah,
so what we've got on the screen here is the long-term price action of Bitcoin. As you can see, at any point during this chart, no matter where you've bought Bitcoin, today the value of Bitcoin is higher than it was at any time that you previously purchased it. So again, to reiterate, if you bought the top here and you sold there, you made a loss, okay? So but if you bought there and held it, you're still up. So
I want to say that crypto didn't do that to you. Bitcoin didn't
do
that to you. So is this
right?
This is often said, crypto, I lost all, and essentially, when you've taken a loss, and if it was based on being manipulated by the energies and emotions, then that is on you. I'm not saying that's easy and it's something you have to do. It's not that crypto did it to you or the asset did it. It's not a problem with the asset. That's the point. People always go, I don't want to buy that because it does this thing. If you've got educator cycles, then you can manage it in a completely different way.
Yes, and you can expect a similar chart, maybe not a double peak, although there are people speculating that we'll see another double peak. You'll expect to see another trajectory. But what's interesting here, you can see the overall trend underlying the peaks. And you take, the average point here, 30,000, it's still 3 times what it was prior to the past peak. So there is an exponential growth within Bitcoin. Plus, we won't go into too many technical indicators here, but what's interesting, if you look at these curves here, I've got the relative RSA, which is the relative strength indicator, including the yellow line, which is the moving average. What's known about the RSI is that when it typically peaks beyond 70, which is seen as an upper range, you'll see that it becomes the starting point. You can see this correlation with the bull run at this point, and you can also see it here. Now, when it radically exceeds that, that's when you get a signal that the market is potentially overheating. If you look at the moving average, the RSI moving average, you can see that that fall normally comes where the moving average has also peaked above 70. So you'll see here for the all-time chart, you can see again the RSI has broken through 70 in correlation with that high point, but the moving average is still lagging. So again, it's not a guarantee. It's not a guarantee that when this line hits this line, things are going to start to change. The stochastics are above the line again, which you can see a usual indicator, pre-bull run. But then when you start to see those drop, that's when you start to see the pricing drop. So there are various indicators that are giving us some level of comfort, but we're in a volatile market. This is a different bull run. It's been driven by different factors. In the next episode, I would like to talk about the FOMO that has been driven by institutions rather than retail this time, because it brings different dynamics. But I'll just show one final indicator, Sam, before we come back to wrap up the conversation, which is one of my favorite indicators, which gives a kind of dashboard. It's called the CBBI indicator. It gives an overall score, an overall confidence level based upon 9 different metrics to assess whether Bitcoin is at the peak. It's currently 82 out of 100. So again, looking at that RSI indicator I've just shown, you can still see that there is potential growth. Here, it shows that there's definitely wriggle room towards the peak. And you can also see all the other different indicators here. You know, some are close to the top or at the top. Others have got some mileage left to go. And again, this is a graphical representation of that. You can see the overall price line there, the different peaks. And again, historically, you can see that the CBBI confidence level has been very accurate. So what we see there, the CBBI confidence level close to 100%, as close as you get, 99, was actually at the last peak. Similarly here in 2017, again, confidence level hits 100 at the peak, and very, very close here again at this point, 97. And you can see here this overall confidence levels at 82, again, currently below the price of Bitcoin. At 82, you can see that there is potential movement here. It isn't to say that, you know, that the market, as you see here at this peak here in November 2020 on the double peak, you know, it dropped, the pricing dropped before it hit that peak. But again, these are all indicators that give us a flavor of where the market is heading and what we can learn from historical indicators. But nothing is guaranteed, Sam. And you know, again, this isn't financial advice. What it hopefully illustrates is it's not as simple as it's going to crash or it's going to go to the moon. Yeah. You know, and all of those things in between that we see on social media. You know, which is why we've put together what we have with the Navigating the Financial Reset program, the Navigating Digital Assets, is to help people in real time to understand what's going on so you can make informed decisions. You know, last night we were talking about how to take profits on the journey and, you know, how you can automate that using various different tools. We also looked at risk mitigation, putting stop losses in place because, you know, people think because they bought an asset, that's it. If it falls, you've lost. That's not true. You know, you can sell on towards the peak if you can, you know, no one can predict where that's going to be, but some indicators can help understand where the market is overheating. And even then, you know, this bull market can be different, driven by institutions. We might see peaks at levels we've never seen before. We may see growth that far exceeds expectations, but ultimately the market psychology is ultimately going to kick in at some point. People will sell, there'll be panic sales, and then the price will decline. But it doesn't mean that you then have to lose your assets. You just need to understand how to maximize your return whilst protecting against the downside. And there's very real things you can do. And again, no one is talking about this in social media. No one is talking about those simple strategies, which again is what sophisticated, or, you know, I don't like the terms, but smart money are doing. So it comes back right to point one: get educated, understand. And the last point on this, Sam, we focused on Bitcoin because, as we know, it's kind of the leading indicator in the overall market infrastructure as it stands. And what normally follows is what we describe as an alt season, which is where the alternative coins have their own bull run. And we are seeing, you know, I've got 60 different assets I'm watching. Every one of them has gone up between 200% and 400% in the last 30 days. Yep. They're on my watch list. You know, I haven't invested in them yet, full disclosure. But Yeah, I still think it's early stage in that altcoin market.
I shared it in the workshop. Anybody, gets hold of the package. I did show that where we are on the altcoin chart in terms of, there's something called Total 3 where you can look at the whole market, taking out Bitcoin and Ethereem, which are the two giants, and see where that market is. And although Bitcoin's hit all-time highs already, actually, the altcoin market has not reached its all-time highs from the last cycle. And always said, altcoins have much greater growth over time in those. So that is still to run massively. And again, that's where you understand why a lot of these smaller assets have already done, like you said there, Dan. Some of them have done 1,000% in the last few months, but that's just the beginning. Some of the figures these assets can do is extraordinary. A lot of them can do 20, 30, 50x's over a bull run, and that is yet to fully kick in. We're seeing the beginnings of the bull market, so it's still early-ish in terms of that phase. We've not seen the full alt season to date. And I think getting perspective on that is also really important for people involved in this market, and how they want to position themselves between the bigger assets, some of the small assets, how you build a portfolio. So all those things are included in the workshops that we host, Dan, so you can get better info and get a really good perspective. And always, what I say, the people who've got that are in this market in an empowered state. They're not having those panic discussions about, will it do this, will it do that? They've got a perspective and they understand that, they're really excited by the upsides and the growth and the long-term, hedging of what's happening in the world. So they've got so many more perspectives to bring to their investment thesis than just, like you said, Dad, will it go to the moon or will it crash? Those are kind of ridiculous questions in a sense. If you just isolate them, they're not very helpful.
Yeah, and also it's important, people have been, I just want to close out on one final thought, because people have been talking about sudden price rises as though Bitcoin has suddenly shot up. Well, let's actually look at the realities of that with the current bull run. It's been on a steady growth, actually, since the beginning of last year. The beginning of last year is where there was steady growth. But then if you look from October 2023, that's when really things have started to accelerate. So it's not like this month it's suddenly grown. It's just that people are talking about it now, and it feels like it's a classic business story. People say overnight success story. They didn't see the 10 years previous that went in hard work and grind to actually develop the skills and capacity to build a business. The same is true of Bitcoin. It's been on a steady growth curve since the last bull, since the beginning of last year, but really starting to accelerate since October, and then kind of coming to this real rapid growth now, which is reflected in the indicators that I've already talked about. But this is why it's important to understand timelines, because if you look at the previous bull market, looking at a similar pattern, really started to kind of start an upward motion from, you could argue, as early as April 2020, coming to its initial peak in April 2021. That's 1 year of growth, but really the main peak in November 21. So we've seen previously these cycles can last 6 months, 12 months, 18 months. So understanding that in conjunction with the various different indicators, market sentiment, macro picture, you can start to understand where the window is. But what I would say is the fact that we are seeing this confidence interval at 80, and we're seeing the kind of relative strength indicator now puncturing 70, and the moving average starting to move up, we could argue that the bull run window is in motion, and potentially that window of opportunity is shrinking, which is why it's time to accelerate your learning. Because what you don't want to do is start learning when the confidence and the confidence of the peak indicator hits 100,
yep.
which is what happens in every cycle. That's when retail investors come in, and that's when as we see that. And I think that my prediction is that is what's going to happen as soon as there's a belief point that's been hit at 70, but there's almost a disbelief point at 70. People are saying, well, that's the peak. Well, the reality is you look at any previous bull run when it's hit all-time highs, the all-time high hasn't been the peak. It's only a step in the journey. So, this could run to 100,000. Some people are saying 150,000. It may not do either of those. But along that journey, there will come a point where FOMO kicks in within the retail markets, or potentially kicks in. And that's when we'll see these inflows into altcoins. That's what typically happens. We'll have the alt season, because again, altcoins, as you mentioned, Sam, have their own patterns.
Yeah,
those patterns are still playing out as previous trends do. And the reason why altcoins are important is because you're seeing growth opportunities within Bitcoin, but you're seeing 100, 10 to 100x opportunities within altcoins during this phase. But
I think if you just jump in, if you marry those two things, which is what we're always talking about, is the maximizing the incredible potential of a bull run, married with the qualities of these assets over the long run.
Yeah,
if you bring those two together, that's the really empowering different thesis. Which
absolutely.
And I think so. It's neither. Again, we will say it's neither either or. It's both and that. So just looking at Bitcoin, if you look at the growth and the qualities of Bitcoin, its scarcity, its decentralized nature, why that leads to growth because of its scarce nature versus fiat. You learn more about the problems with the fiat system and why that's inflating and why that's you're losing value. And also, you look at the altcoin market rather than just thinking about, okay, they could really outperform Bitcoin in this bull market. Also, the serious utility, which is why I say all these institutions, the smartest people in the world, are not gambling. I mean, they are. There is also gambling on dogs. There's a huge amount of frogs, whatever. That's all going on.
Yes.
But at the genius end of this market, there's also these assets which will become the tech giants' future. I always say a lot of the top. This is not a scam or a fad. The top people from the biggest old tech world, Google's, whatever, now work for these assets.
Yes.
Okay. So from an investment point of view, not talking about pure decentralized Bitcoin ethos, that is different. We're talking from an investment point of view. You're looking at a paradigm shift happening in the world. So I always talk about this is Web3. This is the next iteration of the internet. These big funds like Grayscale Trust are not holding things just gambling on an altcoin market. They are holding all the assets that are going to be absolute growth over the next 10 years, regardless of their short-term journey. That's why you're holding some of these assets. You can be like buying your, Amazons and Googles of the future at $1. Even if they have a crash and correction, whatever, they're not going away, and their growth over the next 5, 10, 15, 20 years will be unbelievable, extraordinary. So when you marry those two factors in, it can give you a much different perspective, and I think that's where the magic can be done, which is you can take what the market gives you in the short term. You're not chasing the market, you take what it gives you, but you also understand you're an empowered state in the biggest growth area in the world to hedge against the old world going down and what's happening maybe in your old assets or your fiat currency. So bringing all those things into the equation is, again, takes the education, takes the time. But once you've got that, I think it will transform a lot of people's experience of being in the market, but also just their view of what this market is. And that's why I'm passionate about demystifying it, Dan, as you know, why we're here having these discussions.
Well, the fact that these things are called cryptocurrencies is perhaps the most confusing thing for people, because
it is.
It's the underlying asset represents these technological shifts. And you're absolutely right. Some of the most successful people who have worked within some of the biggest startups on the planet that have gone on to be the unicorns, the $1 billion companies of today are now moving into these markets. And it's not just the staff, the people who are, really technical in their skills. Look at the amount of VC activity, of venture capital that's going into this space.
Yeah.
I mean, on one hand, we've talked about it before and we'll talk about it again. This is the .com bubble 2.0 as a result. We will see lots of madness, but it's important not to get caught up in the madness. It's the same thing that happened during the .com bubble. The smart money, some of the smart money got pretty dumb, which is part of my thesis around institutional money, but being the new dumb money. We'll talk about that potentially in a future episode. Getting caught up in the emotional psychology, but the people that can remain grounded are the ones that can see this long-term opportunity. So there is a short-term window now, and I think that is the short-term window, which could be 3 months, 6 months, 12 months, 18 months, perhaps more, because we're driven by institutions. But we can see that the market is moving in ways in a certain direction. The reality is it too late to invest in Bitcoin over the long term? Absolutely not. Is it too late to invest in this particular run? No, but you've got to be clever. You've got to be defensive as well as on the offense. You have to put risk mitigation strategies more than ever, I think. And this particular run, it's a different run. Learning how to do that is vital. We cover all this inside of our program, Sam, and we'll continue to do so. But there are clear long-term opportunities here. And I love what you're saying, Sam. That's exactly what I'm doing, because within a run like this, there are short-term wins. There are assets that I will invest in during this period that I will not hold over the long term, but they will offer opportunities in the short term. And there are assets, and I love that. My audience know this. I love doing research. I love getting into the detail. There are assets I'm really enjoying learning about, but and again, when it comes to investing, it's best to invest in an area that you're actually interested or fascinated in. Like new media is one for me. Various types of new technology, are fascinating to me. So I love learning about the fundamentals. I love learning about the technology. I love learning about, why the tech is exciting and what impact it's going to make on the world, particularly around the decentralized stuff that's going to help, to break down some of the old systems. You can really geek out on that stuff out of a point of interest, but out of a point of investment, Sam, that's where you can see the long term. So I'm doing a split strategy now. I'm looking at the short term opportunities during this unique window in history, and I'm playing very defensive with those because I'm understanding the risks that come with those investments, and I'll be ready to exit. But over the long term, I'm also looking at those bigger opportunities that I think are game-changing technologies. And again,
it leads. There are people who might say, "I'm really stressed by trying to ride this, time these bull markets." Well, if you did some good research and you bought some really solid assets, you could ignore the bull market entirely, Dan.
Yeah,
I mean, literally, and there are people in that space, and that's talk about Bitcoin as well, who absolutely just stacking Bitcoin for growth over time.
Definitely,
because let's say there are really strong assets that are going to go on to be multi-trillion-dollar huge behemoths, in this Web3 tech sector, that maybe they are valued at $10 a token today, and in the bull market that might be $150 if you peak it, but over time, and that may come down in the next bear market back down to $40, but over time that asset could be an asset that's heading towards thousands of dollars a token. Therefore, you don't need, and that's why there are so many ways to involve this market, which I educate about and discuss, so that you can find a perspective that works for you and is in tune with your lifestyle, your life pattern. There's so many ways, and I think being able to discuss those perspectives and share them is really soothes people and think, okay,
definitely.
It changes everything, Dan, doesn't it? Because
you
could see all that hype and go, and I've said at the workshop last night, very important, a lot of people, you don't need to be, you don't suddenly think, well, I'm in this market, I've got some digital assets, I've got to study the RSI and stochastic with Dan, because you love geeking out that, Dan. I mean, I look at, you could, if that calls you an interest, that could help you over the time. You don't need to. You can have a different approach where you actually don't need to look at that at all. So I just want to reiterate there's so many ways in this market, and what we like to do is foster and garner conversations around that, and a totally open way to go, where are we at, and we're all learning together. Where do you want to be? Because there's a million different ways to approach this thing, and it's all like the whole sovereign journey of everything, Dan. It's complete personal, isn't it?
Yeah, absolutely.
We share perspectives, we help each other, and actually we help each other to find our own unique paths. That's what I'm always passionate about, whatever the topic. Through discussion, through exploration, not to sell a path to each other, but to help each other find our own unique paths to our own best selves. And that's the excitement of this journey for me all round.
Yeah, and on the tech side, just to close on the tech side, the fun thing, like the long-term investing strategy actually comes with quite a lot less stress, quite frankly. Like I'm experienced. That's again why we did the workshop last week. I did it for myself as much as anything else. Is that previously I've only focused on long-term. I've only invested in assets I believe will be here for the long term.
Yep.
But even then, you still have to keep your eyes on the market. You can't completely set and forget, because if you go back to the original tech bubble, and let's look at the world, just even the world of search engines, like anyone old enough to remember, at the beginning, there was Lycos, there was like Yahoo Search, there was Alta Vista. Yahoo's still going, but who really uses Yahoo as a search engine? They've diversified into much broader types of technologies and media. Ask Jeeves, if you remember that. Ask Jeeves. Yeah. There's a whole range of them, and you could invest in them thinking they're the future, and they were the beginnings of the future. But Google has become dominant, and, people are arguing that, I treat Bitcoin differently. It's a store of value as opposed to but it underpins a technology class that's brand new. But really those Googles and Apples and Amazons, and I know people watching this and think, I hate all those companies now. I get that. I get that, but these are new companies that are being born. They don't have to end up in the trajectory that this mad dystopian centralized world has ended up in. We're actually, a lot of these are in reaction to that. A lot of them are decentralized to tackle the problems that the previous world of big tech has created. So, if you're interested in that world and helping to build the future, then you've got to start learning about these things, because A, it's fun and exciting. B, there's long-term and short-term opportunities. And C, we do need change in society. And, on one hand, we do need to unplug a lot more from technology and find ourselves back in nature. But the reality is technology is not going away. So this is a fascinating time to be alive. And if you can manage your emotions and, the COVID chart, if you want to learn how people behave hysterically in emotional environments, look back at COVID. So if you treat your crypto investments in the way that people treated COVID and went absolutely ballistic and insane, well, you're going to make poor decisions. Whereas the rational folk during COVID made different decisions and had different outcomes.
And interesting, Dan, just to sort of close that thought, what was the best thing to do, Bill? Was to go against the herd.
Yes.
In those times, same two 5-letter C words, go against the herd, you'll probably do very well. Right? Don't go with groupthink and mass think who buy the top and get involved in the emotional hysteria. Stay grounded, go against the herd, stay on your unique path, stay true to yourself. And if that served you well, which a lot of people listening will serve you very well through COVID, that will serve you very well through another 5-letter C word, crypto.
Absolutely. Well, thanks for tuning in. I hope this has been interesting. We're going to plan to do like 25, 30 minutes on this. Maybe if we'd left the charts out, it would have been easy to do this. So if you stuck with us to the end, high five to you. Thank you so much for watching. Please do share this. And, when you see in the comments people saying it's going to crash, all those simplistic analysis that we touched upon, put the link to this video in the comments. Just give people a different perspective, because it's important we have a nuanced, holistic understanding of this. We don't expect everyone to agree with us, nor do we want everyone to agree with us. We want diverse discussion. I'm catching my own confirmation bias recently. That's why I'm looking at this thesis that, institutions are the new dumb money. Maybe that's the title of our next episode, because we have to challenge our own biases and perspectives. So as a result, a rich discussion is what we're looking for. So please enter this, share this video with people put it in the comments when people are saying it's all over or it's, this or that. And let's stimulate some discussion. And if you'd like to go deeper on this, as I mentioned, special offer at the moment, bull run offer on our Navigating the Digital Assets program. That's perfect for people who are brand new to digital assets. It's a minefield to you. You want to get your head around the jargon, this wallets, exchanges, all this different stuff. We go through all of that in a very simple 3-part process. We've just added the bonuses, our latest workshops on the bull run specifically, and how to appraise assets. So it's going to give you all the tools you need to enter into this market with confidence, securely, and the ability to manage your risk. If you're looking to actively progress in this and you're looking to enhance your knowledge and deepen your perspectives, then the Navigating the Financial Reset program is where we get together live twice per month to look at what's going on, not only within the crypto space. We're looking at the macro picture. We're looking at the wider economics, political uncertainty. We recently looked at gold. So we're looking at this more holistic and nuanced fashion so you can get a broader, and by the way, in none of these programs we're saying buy this, buy that. We're giving you the tools to make your own decisions. If you want to follow the leader, there are other people that you can go follow. For us, we're trying to make you the leader. We're trying to give you the power to make your own financial decisions, to improve your own circumstances as you see fit within your own set of goals, within your own risk profile, within your own circumstances. So if that sounds appealing to you, go to weareelevate.org/reset. And of course, if you're not looking to invest in any of these things right now, just soak up the education. At least you can have an informed discussion when your uncle starts spouting off down the pub. So thanks again for tuning in. Thank you, Sam. And we'll see you on the next episode of Navigating on the Uncharted Territory podcast.